Hello, everyone. Welcome to All In on Real Estate. I'm your host, Aaron Goins. To start this meetup, because when I was in the military, no one in my circles talked about real estate. And I want to start a meetup where people can learn about real estate and start building generational wealth for them and their families. I'm very, very excited for our guest speaker today, Mr. Brandon Jenkins. How you doing, sir?
I'm doing well. How about yourself?
I'm good, man. I'm excited. Still the first month of the new year, and I'm pumped up and ready to roll, man. So, how was your day so far?
Oh man, it's going well. We have a new addition to the family. I have a little boy, so he's 2 months old.
Oh man,
And we had two daughters, 6 and 3, and so we're pretty busy. But so every day is eventful, but it's a good day.
yeah, man. Congratulations, man. I can understand why you're busy.
Oh yeah, a lot of sleepless nights.
Yeah,
It's worth it though. It's worth it.
Yeah. Lawrence gave you the celebrity emoji already, man. So
Hey, thank you.
So let's get started. Let me ask you this, man. How did you get into? Let me ask the first question I ask everybody. How did you get started in real estate?
So I got started. So I'm gonna give my backstory here. So I started off as a petroleum engineer, and I'm originally from DC, lived in Houston at the time. But I worked as a petroleum engineer for some years. And if you are familiar with oil and gas, then you know how volatile it is, how up and down the market can be. And bottom line is when the price dips a little bit, then they tap you on the shoulder and they show you the door. And so I myself worked through 3 different downturns. But anyway, long story short, the second downturn was significant enough to where it kind of jarred my attention and said, I need to do something about this, right? To have an additional stream of income or several additional streams of income to offset this risk. So I started to buy single family properties just outside of Houston. And so that's kind of how I got my start. But, fast forward a few years, then I wanted to scale up. So I had 12 single family properties, wanted to scale up and started to look for apartment deals. And a good coworker of mine, he knew a capital raiser for syndication deals. And so I connected with that capital raiser, had a few discussions, we met, and it was off to the races after that. I started to get into syndication deals as a limited partner. And then, not too long ago, started on the active side. So I'm a co-GP in 2 deals. And that's how it started. So it was sort of originally out of what I thought was a necessity, but then turned into a passion of mine. So that's my origin story for you.
That's awesome, man. That's awesome, man. What was your first thoughts, man, when you first got into it? Like, what was some of your learning lessons you learned when you first got into it?
One of the things that I learned early on was to actually learn from people who have done it and who have had success, to sort of shorten the learning curve. Because like I said, I'm an engineer by trade. And so for me, I had always had this longing or this misconception to do it yourself, figure out how to do it, and then you have to be the one to do it. And it didn't take me very long to figure out that actually is not the best strategy, especially in real estate investing.
What?
Because there's so many people who have gone before you to do it, and who have sort of paved the way, I guess you could call it, to where it's very easy to understand, okay, well, here is the blueprint, what can I do to make sure that I optimize my practices, things like that. So I just learned to learn from others. I learned to follow the footsteps of people who've been successful at it.
Was you uneasy with your first partnership, or was it you was confident in it? Was did you have any second thoughts about it, or what was it like?
That's a good question. I'll tell you what. So by the time I invested in my first deal as a limited partner, I was actually comfortable with it. But I didn't invest in my first deal passively until, it must have been, I don't know, probably 2 years after I met the individual who was the sponsor on the deal. So when I lived in Houston, I would go to these meetup events and in-person meetups. And that was how I started to meet sponsors. And so I got comfortable with them and how they interact with people, how the way they work. And I got to hear some of their case studies about full cycle deals. And so, it probably took me a little bit longer than it takes some people, but I eventually got comfortable with them through that route, right? So eventually, by the time I wired funds for the deal, I was already fully comfortable with them.
Right. Right. Um, what, so, what has been the biggest pain point for you so far, as real estate investing and things like that for you?
I think the biggest pain point, that is a good one. The you know what, one pain point for me is um, finding partnerships, finding folks who are aligned with your goals, at least enough to make the partnership work. Because in the past, I've had like I'm in some really good partnerships now, but in the past, I've had some where we made an attempt at it and it didn't work out so well, and it was because our vision was not aligned. So for me, that's probably a pretty big pain point. Um, you know, because I think when you have that team that that you're on the same page with, then a lot of the other things that are problematic, they become much easier to tackle, I think.
Right. Right. So when you first started, was this pre-recession or after recession?
Pre-recession. So the first deal that, well, I'm sorry, recession. So it was post-recession. You're talking about the credit crisis, right? So
Yes.
so I didn't start until 2014 was when I bought my first. Yeah. So I was on the other side of it.
Right. Okay. So this is something I always ask people too. How did COVID affect you?
So as a limited partner, I was in, well, I forgot how many deals I was in total during the pandemic, but I'll say that all of the deals except for one didn't do so well. And the main reason, though, is because it was in a market that didn't have that didn't have kind of a broad enough economy. So it didn't have enough sectors represented in that labor market to insulate it from any one particular industry wiping out some of the growth of that market, right? And so so the way it impacted me was actually I learned something from it, because that's now my hard criteria. Before, we all look for job growth and population growth and diversity of economy, but for me, it really drove the point home how important it is to make sure that no one industry represents, say, over 20%, 25% of that local employee base or labor market. So that's kind of what it did for me.
So was you pretty lucky as far as tenants not paying on time and things like that?
Well, so I was an LP in this deal, but we were not so lucky. So I mean, it was a situation where the deal was really stressed and strained by turnover, by folks who I forgot what it was called, the support that the sponsors were supposed to get, or property owners were supposed to get from the government. I forgot what it was called, but unfortunately, some of those funds actually didn't go through, right? And so even though the funds were committed and allocated to certain owners, not everyone got 100% of those funds, and so that was also something that compounded the problem here. So I would say it was just about everything, but it really was all tied to, because in the absence of the pandemic, I think the deal really would have done well, but given what happened, it just didn't perform.
Right. So besides that criteria, I mean, that you just talked about a minute ago, is there anything else you learned from COVID that you can take to your business for future use?
I think communication, actually. And actually, I just had a conversation about this. One of the things that stuck out to me during COVID was, and again, because I was in a number of deals, I got to see this, firsthand. Some of the teams communicated very effectively and increased communication to where, in good times, they maybe just had a monthly report that they sent out to investors, but then they kind of, did a bi-weekly or something like that. So the good sponsorship teams ramped up communication, because they wanted to make sure that everyone knew exactly what was going on, especially because we were not in an ideal climate. But then other teams did the opposite. And instead of making sure that they communicated effectively and frequently with investors, they almost kind of held back a little bit. So one of the things that for me was important that came out of COVID was communicate as often as you can, even if the message is not rosy, the investors, still need to know exactly what's going on. And so that was a big point for me, because it's like I said, we were in a time where really it made sense for every sponsorship team to communicate as often as possible, because we were all in the same situation. And so for some to say, I'm actually going to hold back and withhold information, and others to say, you know what, I'm going to ramp up my communication style. That was really telling for me.
So, I mean, I would imagine that, you really found out, I think you really found out about your partners during this time frame, who is leaning in and who is backing out,
Mm-hmm.
and I can bet that can be enlightening and then stressful at the same time. Was
Yeah.
that?
Yeah, it can be, because if you don't know what's going on, then then you're in the dark, on some things, and that's just not a good place to be, and I think it also maybe indicated a little bit, as far as who is committed. I think, because it takes a level of commitment to communicate even when times aren't going so well. It's if you're in this game, you have to be in it for the good and the bad, I think, in order to survive over the long term. And so if you're only in it for the time when things are rosy, and then you're going to get a surprise, and it won't be a pleasant one.
Right. You can't be a front runner for everything.
Yeah, that's how I feel about it.
Yeah, definitely, because there's a lot of hard work that goes behind the scenes that, and like you said, things are going to happen. I mean, everything's not going to be perfect. We don't live a perfect life, and real estate is not going to be perfect regardless of what you do.
That's right.
So, moving forward, is there anything that are you interested in anything else besides apartments, anything like that? Is it something that interests you in real estate that you would like to pursue in the future?
Yeah, there are a few, assets. I like triple net, so I do like, I like the retail, but I think that for me, self-storage and multifamily are the two that are really, really, that I'm passionate about. Now, I will say that I haven't invested in a self-storage deal yet. I put in offers a few years ago and didn't go through, but self-storage is definitely something that I'm interested in. I think that the ability to add value to self-storage deals is just, to me, it opens up kind of a phenomenal, way to maximize returns and to add value. And just, to me, I think it's just a great vehicle. Yeah.
Do you have any partners in mind that you would like to partner with for self-storage?
I do. Actually, one of them is a former coworker, and a few of his contacts, but yeah, it's I not at a large scale, but I say at a small scale I do. But I know there's some outfits that are doing some really, really large deals, portfolio deals, and so at that level, I haven't identified kind of who I would want to.
Okay, I got somebody in mind. Yeah.
Okay.
We want to. Lawrence knows who she is.
Oh yeah.
Yeah, so I think she's a good candidate. Matter of fact, she just got a deal, like 3 self-storage deals. That's on her LinkedIn account.
Okay.
A couple of days. You saw Lawrence? You know what I'm talking about, right? Yeah. Yeah. So I always like interviewing people and asking them, like, what would you tell somebody new, somebody starting off with real estate? What was your advice be to that person?
My advice would be to seek guidance and mentorship through an investor community. That's what I would honestly say. I know that some mentorship programs, they have a bad rap, depending on who you ask. Personally, I think that they're vital to success in this space. I do, because, and part of the reason is because the price of a mistake is so much. This isn't something where it's you're going to miss out on a couple grand. I used to just think like he's a ball hog. And then I read something where Kobe Bryant. It's all right.
Well, my fault. I was going to the that person and it hit the wrong button. So sorry about that.
That's all right. But yeah, I think that the thing is, you're going to pay one way or the other, right? And so if you get into a deal, you don't have guidance, and you can't speak directly to someone who has been there, done that, and who has had success, then there's in my opinion, there's a strong chance that you're going to end up making a very, very costly mistake. And for some people, that mistake is so pricey that they're out of the game after that. They think that it's the real estate's no good. And so conversely, if you get into a group where you have that guidance and mentorship, then you can have someone say, oh yeah, you know what, don't do that, do this. And they just saved you $100,000, And so my view on it is you're going to pay one way or another. You're either going to pay on the front end or you're going to pay on the back end. And so it's a decision at that point. It's like, do I want to get into a group where I that's it. I think that's you signaling to me that I'm talking too long.
No. It's not.
You just turn that on when I start rambling.
No, I don't know. It's my computer. I don't know why my computer is acting up right now. So
you know how radio shows have like those little sound effects and stuff that they do.
Yeah, no, it's not.
Got a soundboard. That's
not that at all, man. I don't do that. I just want to keep I'm not going to touch my computer for right now. That's what I want to do because it's going to go right to that thing.
He watching highlights.
No. It was a motivational thing. It was a motivational thing.
I know.
So yeah. So and speaking of, like I was talking about ET Hip Hop Preacher mindset, what was advice you give somebody about the mindset to be in real estate?
Oh, that's a good one. I would say that you have to have an emotional tie to it. And it's funny because we talk about the numbers. So from the numbers standpoint, you have to be cold. Yes, absolutely. Let the numbers tell the story, all that good stuff. But when it talks about, for me, when it comes to your goals, when it comes to what you want to achieve out of this business, I believe it helps to have an emotional connection to it. And you have to say, I want my passion. I want to succeed in real estate so that I can do something, so that I can spend more time with my family, so that I can travel whenever I want to, for however long I want to, those kinds of things. So for me, I think what pulls you through the tough times is not necessarily you saying, well, I have some good cash flow and that kind of thing. I think it's because you see beyond that and you see what this business can afford you or your loved ones, or if you want to make an impact. So to me, those are the things that I think are essential from a mindset perspective, is to have something that ties you to it that appeals to you emotionally, because I think you're less likely to give up. If it's cold and if it's strictly the numbers and the data and nothing else, and then things go sour and you just like, what, I'm not in it for the long term. I think it's easier to turn it off. But if you have that commitment and it means something more to you, I believe that builds stickiness, if you will. So
right. I definitely agree with you because it's so easy to quit. It's so easy to look at something and say, oh, that's not worth it, man. Yeah, that's not for me. You can have that, man. You're successful. I'm not. And I see that a lot just from people who are going from 9 to 5 to try and be entrepreneurship. I think they dip their toes into the water, and then it's like, it's a little bit too cold for me. I'm good where I'm at. And do you see that do you see that with investors or anything like that you talk to, that they just put the hold sign because it's like it's a little bit too tight. I'm kind of tight with my money kind of thing.
I see it all the time. I see it on all sides. Let's see. So I'll address the last one first. So from the limited partnership, the passive investor side, I do see it there. And what's funny about that though is sometimes the fallback or the default is to go back to a conventional, quote unquote, conventional vehicle. So you know what, the water's too cold over there. I'm just going to go back to stocks, bonds, right? The stuff that mutual funds, 401k, the traditional. I've always found it interesting that real estate is called an alternative asset class. I don't see how that could be alternative, but
right.
So be it. But so from the potential LP side or the passive investor side, that's what I see as this is too tough. I'm going to give it up and I'm going to go back to that, which is even more of a black box than this. Aaron, if you have a deal and you're a sponsor on the deal and I've invested in it, I could pick up the phone and give you a call.
Right.
But if I buy into a mutual fund, I can't pick up the phone and call my fund manager, and so it's funny to me that people default to that, to something that's that's a mystery. Now, so on the other side of this though, when you're talking about just in general, or someone who's maybe has aspirations of being a GP, I also see it there where it's, they dip their toe partially because they hear about the returns, the potential returns if you're an active partner, right? I mean, active partner. And so that sounds so good, but then when it's like, oh, wait, you have to do due diligence. Wait a second, you have to put up some hard money. Wait a minute, you have to evaluate 100 deals just to get 2 or 3 of them. I have to travel to go see the deal. I'm not even guaranteed to buy the deal. Okay, so you know what I mean? So that's where I see it, and that's why I say that oftentimes, I can't say always, oftentimes what is missing is that emotional connection.
Right. Right. I love the answer. Love the answer, man. Just one more thing, just go around it too. What would you tell somebody who is, I'm hard on my money. I just don't want to let it go. I've earned so much money. I don't want to take this risk with that, but I understand that I kind of want to secure my future kind of person. But they're so tight with their money. When they see a deal, they're so much.
I would tell them this story right here. So I went to an event. It's like a motivational speaking event. This thing it lasts 4 days. It was in Florida, not last year before last. It's toward the end of the year. So I went with a group of fellow investors, active investors. So we went to this event, and once it wrapped up, I got a lot of value from the event. Really kind of connected with the people there. But once it wrapped up, and we were all on a WhatsApp channel so that we could just kind of communicate and have lunch and dinner together, all these things, right? So as we're leaving, we're like, hey, great event, everybody, let's stay connected. Let us know when you make it home safely and things like that, right? So I hop on the plane and I head back home, and I open my phone up and I look in WhatsApp, and I see that several of the people who were at the event said, you know what, I really like it here. I'm going to extend my stay by a week. And then someone else said, you know what, I like it here. I have I brought my daughter with me. We're going to stay for another 2 weeks, because it was in a time when school was out. And so what hit me then was, these people have time freedom. These people have financial freedom and location freedom. And that is what something like this business can afford you. The difference between, being able to be where you want to still have income coming in, regardless of what you're doing, and to have the freedom, or potentially to have the freedom to be able to extend your stay somewhere, right? And I had another conversation. Sorry about that. I had another conversation with someone. Actually, was on my podcast, and this gentleman was supposed to go somewhere for a week. Okay, and it was he and his wife were supposed to go for a week. And while he was kind of handling business, then his wife was able to look up some things and said, you know what, they have something in Costa Rica that we might want to go check out. And they ended up, in the long run, they were there for 3 additional months. And then they found something else in Europe, and they said, well, you know what, they have some sailing and things like that they want to do there. They stayed there for another 2 months, or I think he said 2 or 3 months. So it was a 1 week trip, ended up turning into 6 months of them traveling and enjoying themselves. So that's what I would say. I would say that, you have to think about what this could potentially offer you in the long run. If you invest wisely, you get with the right team, then you have what's a truly passive investment. And you also have the expertise of someone who knows how to handle the deal, doing the work for you. And so that's what I would share with them.
Hey man, you convinced me right there.
Are you ready? Let's go.
I know, right? And you talk about your podcast, man. Can you talk about your podcast a little bit, and what's the channel? What you're doing with it?
Sure. So the podcast is called The Capital Stack, and at its core, it's intended to educate passive investors, kind of help them understand, how to vet the sponsor, the market, and the deal, and how to identify which sponsors are, really kind of the home run hitters and rock star teams and these kind of things. But it's also built geared toward kind of supporting active investors and fund managers. And so what I do with the show is to interview people who have experience in the business, and kind of pick their brain to understand their asset management practices, to understand how they communicate, right? What types of reports they issue, to understand how they find deals and add value to deals. Because as a passive investor, you want to know exactly, people say value add, am I adding value? But you want to know specifically, okay, what are they doing to add value? What does that actually mean? And so that's what those are things we cover on the podcast. We also I also talk to attorneys, CPAs, to the cast that's kind of supporting the business, because that's just as important. Commercial brokers. So we cover the full gamut, but that's the gist of kind of what the show is about.
And, for you just personally, how has the podcast been impactful for you?
It's been enormously impactful, because it's I'm in a deal now that personally I don't think I would have been in unless I made sure that I committed and I've added value to the space. And the podcast is one of the ways that it's done that for me, And so I think having that establishing authority, being able to learn from the people that I'm speaking with, it's helped me there. Being able to connect people. I've had a lot of people reach out and say, how can I get a hold of that person? I've been able to help connect people that way. There are also people who I've interviewed who have had experience in the business, but they really didn't do much as far as exposure and outreach. And so they go in the podcast circuit. And so they said, hey, you want to be on the podcast? And I said, sure, I'll kind of share their information. So it's just helped me enormously, in that regard.
That's awesome. That's awesome. Two more questions. I'm gonna ask the attendees if they want to ask you any questions. Where do you see yourself in 5 years?
Very good, very good. So in 5 years, so my firm, the name of my company is Birch Prosper. And in 5 years, I see us I still want to stay a relatively small company, so like 20 or less, but I basically see us being a full in-house private equity firm. And so if I could, my vision for the firm is to buy around 1,000 to 2,000 doors a year, and to have a mixture. Some of them are held for long term, and then other ones are kind of your classic syndication value add deals. So that's where I see the company going.
Okay. And last one, how has exposure and travel helped you in your career?
Well, so travel in terms of going to
just traveling around, just seeing like different cultures, or just how different people live, not just living in one area, but just seeing how different people are.
No, that's a good question. You got some really good questions. So at a relatively early age, I was exposed to two things. When I was in high school, actually both of these things were in high school. One, I spent a summer in Ghana. The other one was a summer camp, but it was an international summer camp. So you had people from all over the world. That it was in upstate New York, called Camp Rising Sun, and you had people from all over the world that would come there. So Japan, India, Norway. You had people from everywhere. So those two experiences for me were vital in sort of shaping my worldview at an early age, because I got to experience people from all over the world, different cultures. And I grew up in DC, and back then DC was one way, and so for me, being able to be around, different cultures and different groups was really helpful and really eye-opening. And it just exposed me to so many things that my peers were not able to be exposed to. So for me, it was essential. It helped me appreciate other cultures, which I think is very important.
Have you, it's kind of, I had one question to it, but have you been exposed to anything in real estate in the last couple of years? As far as deals or access to people and things like that, that's really just got you excited and about the future?
Yeah, absolutely. Yeah, I it's happened to me on multiple occasions. Like I'll give you an example. One of the conferences that I went to, I had a conversation with a gentleman who was in the middle of an $80 million transaction. He's closing the deal, is $80 million. And I think at the time, he kind of shared with me the size of the team. It really was not that large of a team. And so I was just thinking about it in that moment. It's like, I don't think I would have had the opportunity to just have a one-on-one with someone like that in my past. And that goes back to why I say community and plugging into, actively seeking out these groups and these communities is important, because I don't know about you, but for me, I wouldn't have been around anything like that. I had a gentleman who was on my podcast who started a $100 million fund. I never would have had a conversation with someone like that. So what it's done for me though is to realize that these people are not that much different than you and I, yet they're doing these things and they're operating at this high level. And oh, by the way, they're willing to have a conversation about it. So it's done those kinds of things for me. It's things that I thought were completely closed off in the past. I've come to realize that they're not so closed off. You just have to go out and seek that perspective.
And man, you got some jewels, man. I really love the trajectory in your career, what you've been doing. You live right down the street from me, man. I'm from Baltimore, so
Yeah, I know. I hear when you say you.
yeah. I know people make fun of me all the time. I was playing basketball yesterday, and somebody messed with me about that yesterday. Lawrence, somebody messed with me yesterday about my accent, but it's okay. It's okay. Love them anyway. But man, thank you so much, man. Apologize for the sound bites on my computer, but I want to get that person's name for you, and I'll provide it for you before this meetup is over with. So I want to open up for attendees. I can't wait to hear what they're going to ask you. I'm going to mute myself in a minute, so you want to hear this sound bite so I can get off of it. But anybody has a question, please ask Brandon.
Hey, Brandon, how you doing? Thank you for sharing your experience and strength and hope for your future, or your family's future.
Go ahead, Lawrence. Go ahead, Lawrence.
No, that's all right.
I used to just think like he's a ball hog, and then I read.
I told you got a soundboard.
But he didn't get a Mac. That's what he needed.
Yeah.
He didn't get a Mac. Probably got that daggone IBM thing going on. Anyway, well, there's two questions I ask you. Right now, what areas are you investing in? What areas you focus most on? What areas?
So my core focus. So as a limited partner, I invest throughout the Sun Belt, and so I have a much wider area, I guess you can call it, that I cover there. As a GP, for me, my main focus, Houston. I've been there 10 years. I lived there for 10 years, so I have the knowledge of that market. DFW, and I actually like Arkansas a lot. So Northwest Arkansas. There's some markets there that have some really, really high growth. And so it's a lot of capital that's kind of flooding into that market, a lot of growth there. And so that's a great market as well. And also have interest in Atlanta and the Carolinas. But for me, Houston, DFW, Northwest Arkansas, those are my core kind of markets right now.
Mm-hmm. And I got another question. How has the rising rates affected your underwriting and investment strategy?
Oh man, good point. So I'm still looking. Well, so I'll answer the strategy one first. And right now, the strategy for me is to pursue to go after loan assumptions where I can. And so actually, the deal that they're working on right now, it's a HUD loan assumption, and so it's got 3.5 fixed. Where it's got this 3.5 fixed for just a long remaining term, 38 years remaining. And so, which that not to say that those are the only kind that I go after, because that's almost a unicorn deal in this environment, but that's the strategy piece, right? Is to target deals where I can have kind of that a loan assumption if possible to keep the rate nice and low. Obviously not going after anything variable. I do think though that, historically we've seen 24 months or so after the initial rate hike, you start to see rates curtail. And so that's also a part of my strategy, trying to kind of target that point as an potentially exit. And what was your other question? I'm sorry. So how does it impact the underwriting? And
how when you're underwriting, how has the rates affected your underwriting? Because what I'm saying is that because last year everybody's talking about cranking up rents, right? But there's also rents are sort of like either we're getting real soft right now. So how are you underwriting to this new day?
So one of the other things that I'm doing is cutting the rent increase projections down, right? So if you cutting them by basically in half. So if I'm in a market where even though we're year on year, you've seen 14+% or something like that, I'm still holding it at that 4 or 5, 7 at the most percent increase. So those kinds of things, just staying conservative on the growth side of it.
Okay. And on the expense side, what are you doing? What are you doing for the expense side in the underwriting?
4% annual, 4 to 5%, depending on kind of where it is.
Okay. Thank you, sir. Thank you, man. Good seeing you. That's for sure.
Yeah, good seeing you.
Anybody else have any other questions?
I got my thing fixed, man. I had to, it took me a
Sure.
couple minutes.
I got a question.
Yeah.
All right, so what market do you see yourself, well, what market do you see increasing or being like the next, what market was like booming? Like Florida. I guess Florida, when during the pandemic, was a booming market as far as real estate. I know you mentioned Arkansas, but do you have any other markets that are out there?
Yeah, that's a good question. You mean which other markets there might be a breakout market?
Yes, that's correct.
That's a good question. So if I kind of looking at, that's a good question. Because so I think fundamentally speaking, I'd have to think about that one. Because there are a lot of markets where I don't see the gateway. So here's what I would say to that. If you're looking at a gateway market, so there's some of the major MSAs, they call them gateway cities, and in my opinion, any secondary market or tertiary market, well, not secondary, but tertiary market of a gateway city, I think in the near term will perform well if it feeds off of that MSA. So as an example, if you look at, I was going to say Houston, but I don't think any tertiary markets of Houston are going to fit in this profile. Okay, so here, Atlanta as an example. There's some, depending on who you ask, Atlanta might be kind of experiencing a drawback a bit, right? But the tertiary markets of Atlanta are not. Okay, because it's more affordable there. And so that's my overall view on it. Now I'll admit I don't have any kind of markets like picked out other than like I mentioned the Northwest Arkansas, that kind of market, but I don't have anything else that's like picked out to where these are potential breakout markets. But I think in general that's where I would look.
I got a second part to that question. Now, would it be more feasible to buy to sell or buy to rent?
Buy to maybe clarify the question.
So if you're like Detroit was a booming market for when you can get property at a low value, fix it up, and get a reasonable turnaround. Now, since everybody's in Detroit, it's not really one of them cities that you can actually do that. Maybe Northern Arkansas. I think I know why you're talking about Northern Arkansas, because actually a market that I would look at too is Northern Alabama, because a lot of things are getting built there as well, and a lot of jobs are coming there. So that would be like a traditional, like the Northern Alabama area. Market was pretty reasonably low, and all of a sudden capital starting to come there to where now you can turn around and get a measurable profit.
Yeah.
So it would be, instead of renting, you'd probably be better to sell. That's what I was asking. Is it one of those, like, is it a buyer's market to buy to sell, or is it one of those buyer's markets to buy to rent?
I think you also got to clarify, you talking about single family or multifamily, Clayton?
I'm my bad, single family. I should say single family.
And that's cool too, because I can still answer that one. I would say the market, it depends on where that area is in terms of the market cycle. The single family market cycle is different from the multifamily side, because I feel like you have a lot more flexibility on the single family side with what you can do. But just broadly speaking, if you are in a recession, in the recessionary sort of period of the cycle in that local area, and wherever it is, really doesn't even matter. If you're in the recession period there, then it's a good time to buy and hold, because you're going to go through the recession, then recovery, and then expansion. And then you're kind of selling in the recovery to expansion leg of the cycle. So it depends. I mean, because I'm a buy and hold guy, especially on single family side. I always look for deals that I could hold, just because of, for cash flow. But I will say that, there is a case to be made to where if you're in a recessionary environment where there's not a whole lot of new inventory being put on the market, and prices are really low, much lower than their intrinsic value, then yeah, you buy at that point, knowing that the value will increase later. You know, you look at, because like in my backyard, I'm in DC, but sort of in my backyard, prices are starting to come down because rates are so high. So we're in a unique period right now, and historically speaking. But just in terms of the cycle, I would say it might be a good time to buy it, and with the plan to sell once you get out of recovery and into expansion. That's what I would say. But again, for me, I was always a buy and hold guy.
Okay, thank you.
Which market are you in?
I'm in the same market as you. I'm in DC.
Okay. What part of DC?
I'm in Maryland, so I hate to say, you know, people go say DC. I'm in Maryland.
Oh yeah,
I'm in Clarksburg.
Okay, good. All right. That's
PG County. You know, everybody want to say they from DC, but
Yeah.
some people from PG County. So
Yeah, DMV. So you're from the DMV.
No, I'm on the DMV.
There you go.
That's like saying I'm from Brooklyn.
yeah, I know. Right? yeah. Hey, don't tell him he's from Brooklyn. Oh, he won't like that.
I know it, in the Bronx, you got like Riverdale. You're still in the Bronx, no, but I'm in Riverdale. That's okay. I'm just saying Samsung. Yeah, no problem.
Man, any more questions for Brandon? Okay. So
I got one more question. Before you go, I got one more question. Right? What would you suggest to somebody in where we at right now in the economic turn right now? What would your suggestion be for somebody who's just starting out right now in this environment?
That's a good question. Let's see. They're just starting out, and they have capital to deploy, and they want to. But the question is, should they or should they not?
But that point, and also, what would somebody do? Somebody just starting out as they learn what should they do right now? Because this day, somebody say, oh, it's going to turn. End of the year is going to be turning. Right? Everybody's prognosticating. Right? Everybody got a whole lot of stuff going on, but they're not. That's what they're just their brain, not the money.
Yeah, I would say that focus on, if someone's like just starting out, I would say the education piece. I would say education, and again, for me, getting around people who've done it well. Get around people who have seen a couple of cycles. That's what I would say. I would say make sure you continue to educate yourself, and if someone's just getting into real estate, I would say probably don't get into an environment that's like it is now, where you have so many different variables because to me the risk of getting in now, if you're brand new getting in now, is that you don't know what right looks like, I guess you can say, because there's so many different variables and moving parts that are kind of working against you, that you have to rely so heavily on the sponsorship team, that I don't know, it can if I'm new and I got into this environment and I had to place my full trust in the sponsorship team because a lot of the deals just don't make sense, I don't know if that's the ideal time to start. If you're in and you have capital and you've identified which teams can perform and these kinds of which markets you like, all that. But yeah, I mean, it's still going to be deal dependent, and you can find some great deals in this market. But someone who's brand new, I would say education, find out who in your city, in your area, which has done it and who survived some cycles and had success, and then try and link up with them. That's what I would say.
Thank you.
Any more questions for Brandon? Okay, man. Well, I guess you start a little early. Man, hey, I know that you're a man of time, man. So I'm not gonna hold you up too long. I just want to say thank you once again, man, for coming on here. I thank Chantel once again for coming through. And I really appreciate you, coming on here, man, and dropping some jewels and really laying out a blueprint for people to really get started and really push forward. And I'm really excited for you, man, just to, like you said, get that exposure, talking to people, like you said. I mean, it just opens so much in your mind And like you said before, it really tells you like, if they can do it, I can do it.
Mhm.
And too many people, I think, look up to people and say, I can't be like that
I
person.
can't. Yeah.
But you can. It might take some time, but you can if you really want it like that. I mean, God has made everybody equal for a reason, and
Mhm.
He's given everybody a opportunity. So
Yeah.
I really love that, man. And like I said, I apologize to everybody before about the audio. Got my little motivational stuff on there, and I didn't know it was gonna go off like that on my computer when I was trying to go on LinkedIn. But I did send you the link. The link is in your comment section, so you can talk to that person that we have. So I think she'd be a great asset for you.
Absolutely, man. And listen, I really appreciate it again. It's my pleasure to be here. And I've seen, because I think you and I connected, I believe, initially early, I think it was
Last year,
early last year. And so
right.
and just seeing your growth as well, man. So this again, it's a pleasure seeing you continue to grow. And thank you so much for having me, on your show, man. I just thank you so much for letting me share the stage.
Yeah, absolutely, man, absolutely, and don't be surprised. I'll say, hey, man, can you come on later on this year?
All right, let me know.
and you might get a certain guest host on here that might ask you as well. I don't know who he is, but
Well, hey, let's do it.
See that right now. He looking around. We said that one. He ain't looking around. We said that one. But yeah, man, thank you so much, man. And if you guys have any questions, please ask them. I'm just going to go off the recording, but thank you guys so much for coming to the meetup. We will come back on the meetup next month with another guest speaker, and just really excited for 2022. Just remember, everyone. 2023. I'm sorry, 2023. Just remember that we all have the opportunities. God has given us all opportunities to advance in our life. Every day is an opportunity. Every day is an opportunity. Do not waste opportunities, because you never know what's going to happen tomorrow. So take advantage of opportunities you have today. God bless you. And we'll see you next time.